Welcome back to Retiring. Today we're going through our succession checklist here with Haley Gutschenritter and Loren Merkle. So preparing people for the loss of a spouse, some of the things you can do now to get ready for that as you're moving to and through retirement, and then some of the things you may have to encounter once your spouse passes. So it follows also the components of the retirement plan. So we went over the lifestyle piece. Let's go over income now. Haley, what are some important tips that people need for this?
Well, often a resource that gets overlooked is Social Security. And Social Security can account for anywhere between 20 to 35% of your income needs. And what many people don't know is that when your spouse passes away, you could be entitled to survivorship benefits. Now, there's different kinds of survivorship benefits, so it can get often convoluted. But in general, you do want to contact the Social Security Department because there's a lifetime lump sum death benefit of $255 once your spouse passes away. And then on top of that, you want to talk about your specific situation and see if you are entitled to a higher Social Security benefit.
I can't believe she said convoluted when it comes to Social Security, Loren. I'm so shocked.
It's
such a simple process, just a couple of options, no big deal.
Yeah, no big deal at all.
Government makes it simple for us, right?
Very simple. I mean, just go to their website and go through all the different paragraphs. You read one paragraph, you read another paragraph, and it feels like it contradicts each other. There's nothing really easy about Social Security, and especially when we're talking about survivorship benefits. Survivorship benefits is where Social Security really gets complicated because when your spouse passes, were you already taking Social Security? Was he or she already taking Social Security? Are you guys 10 years away from being eligible to take Social Security? Are you above age 70? I mean, there's all these different things matter is when it comes to what options do you have as a surviving spouse, just when we talk about Social Security alone.
Yeah, and electing Social Security, I know I'm kind of going backwards. We're talking about the end of life, but the beginning of Social Security is a whole process. And I know you walk people through that when they're electing for that first time. I'm assuming you also walk them through if they need help with these survivorship benefits or widow benefits as well.
Absolutely. If you're electing Social Security and you're a married couple, you have up to 81 different options when it comes down to electing Social Security. And then throw in your survivorship options on top of that. That's a lot of questions. So survivorship, one thing that is different between electing your primary benefit is that you could be entitled to survivorship benefits at the age of 60. Typically with Social Security, your first age of eligibility is age 62. So many people don't know that. And then you could also collect survivorship benefits if you were collecting off of an ex-spouse. So it doesn't just have to be somebody that you were currently married to. It could be a previous ex-spouse.
Yeah, I mean, there's a lot that goes into it. One of the things that makes it even more challenging is the legislative changes as it relates to Social Security. 2016, there was a huge Social Security legislative change, which really makes it confusing because some people feel like the survivorship option isn't available anymore because there were spousal options that were completely eliminated for most people back in 2016. So there's just a lot of if-thens. We really need to investigate all of your different options as it relates to Social Security to make sure you are getting the biggest payment amount you can from that benefit.
You're taking a look at our succession checklist. You can download this checklist at successionchecklist.com. And let's go to the next thing on the checklist. It's taxes. It's a big part of what we do when we help people put together retirement plans. But then at the end of this retirement phase, when one of the spouse dies, there's some things you need to know about taxes.
Absolutely. Your tax brackets will change. So married filing jointly, you have a favorable tax bracket because you can realize a bunch more taxable income and be taxed at a lower rate. So for example, if we had Mr. and Mrs. Jones and they brought in $80,000 of taxable income, their tax rate would be 12% on that $80,000. But if Mr. Jones passed away and Mrs. Jones still needs that $80,000 worth of income to live her lifestyle, well, that's going to be taxed at 22%. So much higher tax rate. So if we can engage in tax planning strategies in the year that your spouse passes away and try to mitigate that tax bill for your upcoming future, you're going to long-term benefit from that.
And that's part of the reason with our married couples, we engage in tax planning as soon as we possibly can because we talk all the time about how right now taxes are on sale. Eventually we feel like tax rates are going to go up, but we know in most circumstances when you file single versus filing married, your tax rates, your top marginal tax rate is going to increase based on that same level of income. So doing tax planning as soon as you possibly can, hopefully while you're both alive, can prevent a tax rate increase that is really steep once one of you does pass away.
And often a misconception when your spouse passes away is you think, hey, I don't need as much income as I once did when both of us were alive. But that's not necessarily true. For many families, they have this guaranteed income that is turned on and you can't turn it off. So one thing is RMDs and pension income. So if you're still delivering the same amount of income that you were when both of you were alive, well, now you're going to be paying more taxes on that, and it's only because your spouse passed away.
Yeah, and even just the lifestyle needs. I mean, there's certain basic needs that you have to pay for, whether it's one of you or two of you. And the other thing that we see when a spouse passes away, well, the surviving spouse, maybe they were in a bigger house that accommodated both their needs. Maybe it was in their family house when they had kids, but now there's one of you, and you may not want that big house, so then there's extra costs associated, especially in this housing market where downsizing isn't necessarily down pricing.
No, it's cheaper, yeah.
Yeah, right. So we do see some added expenses, even when it's just one of you as opposed to when there was two of you, that we have to plan on and account for.
The next piece of the succession checklist is investments. Sometimes you need to change what title, beneficiaries, things like that.
Absolutely. So when your spouse passes away, they typically have beneficiaries set up on those accounts. And this is where a financial planner can be so much value, because this paperwork is just massive. You do not want to be doing all this paperwork by yourself. It's very easy to make a mistake when filling out that paperwork. But when your spouse passes, you have to change ownership of those accounts. So work with your financial planner, see how the beneficiaries are titled and listed, and let them help you take that burden off your plate so that they can help transfer those assets into your name in the most efficient way possible.
Thank you for watching this clip of Retiring Today, and don't forget to subscribe. If you have questions about your retirement plan, take advantage of the complimentary 15-minute retirement checkup phone call.